Hello, everyone. Good morning. Happy Tuesday. There's a little sunshine. The Dow is up 170 points, 0.6%. Again, this means nothing because at the end of the day, it could be down 400. Who knows? But I wanted to talk to you today about the S&P 500 or the stock market as a whole in general terms. I wanted to talk to you about this because it keeps going up and down and nobody's quite certain which way it's going to go. And I have some thoughts behind statistical analysis and economic trends and what the federal government is doing to intervene to prop this stock market up. Many of you are fully aware of some of these things that I am talking about. But what I wanted to specifically help with is avoiding any sort of panic. Is the stock market going to correct? Most likely. Most likely before the end of this year or into next year is what they are stating. Again, consult your own financial advisor, do your own due diligence. But I just wanted to give you some thoughts from a logical perspective and helping anybody just keep a level head during these choppy waves out here in the stock, out there in the stock market. So in the month of June, in the month of March, obviously everybody saw the large dip due to the Rona situation. That dip was somewhere around 40%, maybe more. And the recovery of it has been phenomenal. We are right now just a few points under the 2019 highs. We are also just yesterday, we were neck and neck for the high of 2020. And that's amazing. That's amazing. So why is this happening? This is happening because the federal government is intervening with the stock market. So the federal government is sending out stimulus checks to those who have lost their employment or cannot find employment because of the Rona. The federal government lowered interest rates. I just looked at interest rates for a mortgage. You can get, for those of you that don't know, right now you can get an interest rate for a mortgage as low as 2.75. When is the last time you ever heard of a mortgage for 2.75% interest rate? At least I don't think I have. Not this low. I thought 4 or 5% was pretty good. I know in the 80s they were paying 8%. But just in case you didn't know, there's some information for you. Also, I was talking about the federal government. The government is also, not only are they lowering interest rates, but they're buying what they call junk bonds. And junk bonds are bonds for companies that aren't very valuable, to put it in a very simple term. There's a rating for these bonds, and you know how you have your credit rating. A credit rating of 720 is considered 700, 720, somewhere around there is considered pretty good. Well, the government is buying, as an example, contrasting example, is buying credit ratings. If they were buying consumer credit ratings, they're buying 500, 600, something like that. That's what they call it, junk bonds. So all of these things that they are doing are helping to prop the market up. They're helping with the optimism. And my favorite one is the money printer. They just keep printing and printing and printing. You keep loaning and loaning and printing, and I'll keep it simple. You could, somebody could talk all day and have a conversation about these things, but that is why I think it's important to keep a level head about investments or trading, whatever you're doing. For the month of July, there's headlines. Let me show you this headline. So if you see this headline, it says, basically says, JP Morgan beats on earnings, but Diamond warns on much uncertainty. Well, an article like this depicts the current situation that we're in. We're optimistic, but yet then we're not. So who knows? Who really knows what's going on? That's why it's important to be careful with what articles you read and be careful what your information source is. And again, do your own due diligence. Don't listen to a random guy on YouTube. Those are the main points that I wanted to convey to you. Now I wanted to talk from a statistical standpoint on the SPY, I call it, is what I use, the ETF, to look at market trends. So from a statistical standpoint, I wanted to talk to you about right now, the market is neither overbought nor oversold. It's heading, in the month of June, we saw that it was overbought. What they call the relative strength indicator showed that it was overbought. And right now it's neither overbought nor oversold. And because in June we saw another correction after the March event, it was incredible how far up this market went. I can do another more in-depth video if anybody's interested from the statistical standpoint on the S&P 500, but at a high level, I just wanted to bring that up. The volume, the share volume for the S&P 500 right now is about average. On average, we're at 100 million, and I think it's at 102 million, or vice versa. The average is 102 million, we're at 100 million. So we're splitting hairs there if we want to be exact, but let's just say it's average right now. So the other thing is, for the year, it's up 4.72%. The S&P 500 is up 4.72%. That shows that the things are, for the moment, somewhat stable in the economy. And you have many economists right now debating on what the recovery shape is going to look like. Is it going to look like a V, meaning we shoot down and then we shoot right back up, or is it going to look like a W, we shoot down, we shoot up, and then we shoot down and we shoot up again? Right now, it's looking to be, from my personal opinion and perspective, it's looking to be a V shape for this year. That doesn't mean that the W won't be here next year, because we're also, keep in mind, we're dealing with quite a bit in the United States right now for 2020. Many things going on. I'll leave it at that. I hope that this video is of some value. If it is, please like, subscribe. I'll be making more videos on the economy as a whole, the market as a whole, And also, I will be researching individual stocks. The electric vehicle market is something that has me very excited right now because we need to get to zero emission rather soon. California just passed the law where they're forcing X amount of vehicles by the year 2024 to be all zero emissions. So that's one sector that I'm following right now, and I will be doing, and I have done in-depth research on some of those stocks, or I have done a good amount of research where I am optimistic on them. They're out there in case anybody's interested in checking that out. All right. Have a great rest of your Tuesday. Have a great rest of the week ahead, and we'll talk soon. Thank you.